Look at what just happened. Bitcoin closed April up 12%. The S&P 500 just hit a new all-time high, and the Russell 2000 just pushed to 2,800, fresh all-time highs. And while most people are still asking if this rally is real, institutions already made their move. Not quietly, not gradually, but in a way that changes the structure of the entire market. Because this isn't hype anymore. This is a shift. This content is for informational and educational purposes only and is not financial advice. Always do your own research before making investment decisions. Welcome back to Ledger Pulse, where we break down what's actually happening beneath the surface of crypto and global markets. Not the noise, not the headlines, but the signals that matter. Because right now, we're at a turning point, and most people are still looking the wrong way. Let's start with the macro picture, because this is where everything begins. You got the S&P 500 breaking into new highs, the Russell 2000 hitting 2,800 all-time highs, and Bitcoin closing the month strong at plus 12%. Now here's why that combination matters. When large caps and small caps are both breaking out, that's not defensive positioning. That's risk-on behavior across the board. And when you layer Bitcoin's strength on top of that, you're no longer in uncertainty. You're entering expansion. This is where most people misread the market. They think, prices are up. Maybe I missed it. But that's not how cycles work. Breakouts like this don't signal the end. They signal the beginning of capital rotation. Now let's talk about who's actually driving this, because it's not retail. A Canadian pension fund managing nearly $200 billion just disclosed a $219 million position in Bitcoin via strategy. That's not speculation, that's allocation strategy. At the same time, we're seeing continued evidence that banks are accelerating into crypto through stablecoin development, tokenized deposits, and on-chain settlement systems. So when people say adoption is slow, that's just surface level thinking. Adoption has already happened. What we're seeing now is exposure. Institutions don't chase hype. They build positions quietly. And then the narrative shows up after. That's exactly where we are right now. Now this is where things get even more interesting. Because while Bitcoin is getting institutional allocation, Ripple is building infrastructure. And the signals this week were not subtle. First, we have Ripple expanding in the Middle East and Africa, opening a regional headquarters in Dubai. That region is critical for cross-border payments, liquidity corridors, and emerging market finance. Second, a major exchange partnership with OKX introduces RLUSD, Ripple's USD-backed stablecoin. And this is key. RLUSD is integrated into deep liquidity pools, tradable across hundreds of pairs, used in derivatives markets, and accepted as institutional-grade collateral. That's not a retail stablecoin. That's back-end financial infrastructure. Most people look at price, but price follows infrastructure. And infrastructure is what's being built right now. Now zoom in even further, because this is where the narrative becomes undeniable. The XRP Ledger is being used in a Korean won stablecoin proof of concept. Not theory, not speculation. Execution. And this matters because Korea is a major XRP market, a high liquidity region, and deeply connected to global FX flows. So if XRPL becomes part of stablecoin issuance and settlement, it positions itself directly inside foreign exchange infrastructure. And FX is not a niche market. It's one of the largest markets in the world. So this isn't just crypto growth. This is crypto integrating into global finance. Now step back, because this is where everything clicks. You got macro markets breaking out, Russell 2000 confirming broad risk appetite, institutional capital entering Bitcoin, banks accelerating blockchain infrastructure, Ripple expanding globally, and the XRPL being tested in real-world currency systems. This is not random. This is alignment. And when alignment happens, markets don't move gradually. They reprice. And now we add in the final layer, policy. Over 28,000 Americans just sent a direct message to Washington. Move forward on regulatory clarity. This matters because it shows the market isn't waiting anymore. It's pushing forward, with or without permission. Regulation doesn't create markets, it catches up to them. And right now, it's behind. So here's the reality. If you're still looking at crypto like it's a retail-driven cycle, you're missing the bigger picture. because this cycle is different. It's being driven by institutions, infrastructure, and global integration. And the biggest moves, they don't happen when everything is obvious. They happen when the shift is already happening. But most people haven't recognized it yet. And that's exactly where we are. If you want to stay ahead of this shift and not react to it, make sure you're subscribed, because we're tracking the signals most people overlook and breaking them down before they show up in price. If you enjoyed this breakdown, hit the like button. This is a growing channel, and it goes a long way in helping me out. If you want to hear more breakdowns, check out these videos here. Thanks for listening, and we'll catch you in the next one.